Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap. Happy St. Patrick's Day if you're Irish, or if you just play like you're Irish because you want to go out and have a good time. Did I say welcome to today's recap and look ahead? Well, here you are. Okay, it's Thursday. It's been a long week. Over the past 2 weeks, we've had the Bank of Japan go over their stimulus policy. You had the ECB, and then yesterday you had the Fed. And every step of the way, everyone's been very cautionary. Be careful. Lots of guys just saying this isn't going to end well and trying to be short, et cetera, et cetera. But meanwhile, really the technicals have been in charge. The 8/21-day moving average has been the roadmap during this entire 4-week rally. You didn't have to listen to everyone on TV. You didn't have to listen to all the newsletters, all the institutions. All you had to do is follow it and simplify it. Sometimes simplify or simplification is better. That's why I call myself a cocktail napkin technician, because sometimes it's better to use letters or rulers and crayons versus trying to outthink it or outsmart it. And the trend is your friend until it's not. And that phrase came out of somewhere because it's helped keep people safe and sound. So one of the rules that I always talk about is when we're above the 8 and 21-day moving average, you try and be long. You don't have to be all in long, but at least you just don't try and be blindly short, because shorts are getting their clocked cleaned. Okay, I don't care if they started 30 handles ago, they're probably upset, 50 handles or 100 handles. Besides losing money, they're also the opportunity cost of not finding a good pattern. So anyway, Fed was yesterday, they were very dovish. Lots of things transpired that usually are in that dovish play card deck. And we said today would be a trend day. We didn't know which way it would be. It wound up being up. And there were 2 or 3 different spots to make adjustments if you came in short or if you wanted to buy a few different scenarios. And let's just get to the chart because I'm babbling. Let's go. All right. So what do I talk about? Did I just mention a letter? Here is your letter. First you had your V. The V wasn't strong enough. That turned into a W, which is also called a double bottom. Here, if you took your ruler, went across resistance, first time we got here, oh my goodness, we're going to fail. Came back down, and then what did we do? We held the 8 and 21-day moving average. So this was your spot if you missed the bottom to get some exposure, get short off the brain, because if the bears had any power, it would have failed. Same thing over here. Oh, look at this. What a coinky dink. You had your V. That turned into a higher low W. First time you got back to resistance, it failed. This time went through, retested, and then rallied. Followed the 8-day the entire time. We tried to show you how correlations happen, and that's pretty much what happened here. So let's just magnify it a little bit, to this most current trend. So here's that red dog reversal when it traded below the prior pivot, came back above it, came back to the 8-day, and we've been following it ever since. And basically have been up above the 8-day and the 21-day. So not telling you to be short, not telling you to roll up a situation that could put you out of business. But anyway, for today we talked about, A, will this pivot get taken out, which was yesterday's high, and would we hold the 8-day? And basically, we didn't even get to the 8-day again. We started off red. When we went green, you could have covered shorts, got long. When we went above, 2032, you could have added to longs or got long for a trade, and PS went as high as 2046. So now, what do you know? All we know is this. There's one resistance, and here's another resistance, and we're getting pretty darn close to a whole nother area. This was your first area. Remember this? Could we get through, prior support that could turn into resistance where we paused? Well, we didn't get it through the first time. We held and we continued. And that is that. Today wasn't your usual day. High beta tech wasn't in fuego. You didn't have Apple rocking and rolling like the last few days, and Amazon was weak, and Facebook took the day off, and Netflix tried to go but stalled. The action was in the materials. The action was in energy names, some steel names. The rotation that happened or started to happen a month ago has been strong. We've been showing you the chart of the XLE. The XLE, look at that. Okay, remember this chart? I think I did it with Annabelle when we broke above this inside range and took back the 8-day. Well, quick move, retest the 8-day, another move. And now here we are coming into the 200-day, which will probably be your next resistance. Yesterday, everyone cried on the overall weakness in the Russell. Well, all the Russell did is consolidate a move that started here. Okay, remember this little pause right into the resistance. Went above the 8-day, looked a little scary. This was scary. Didn't get below it, came above it, held it again, and now boom, getting right back to the highs. And now this little consolidation might be something that leads us to the 200-day, which could, take that baton. And then this morning, remember I said if we're going to have weakness, they're going to have to really be able to sell the banks, sell the bios, and see a reversal in some of the steals. Well, the banks were weak early on, and then they came off the lows. There was no pressure there. So that's when the market started to lift. And look at the banks. The banks all of a sudden, boom. Not only did they not fall apart, they broke this little flag pattern. And what did it do? What a quinky dink. It held the 8-day moving average. Get your ruler out. This also held the ascending channel here. So things are still intact. And there's your 200-day. In high beta land, like I just mentioned, Amazon had news. It was weak. I said, can it hold 570? It didn't. Didn't try it all day. Got out of the way. This Amazon now, a little bit, wishy-washy. It's more in the penalty box. It did make a higher high here. It kind of failed. And then this small ascending channel here broke to the downside. Ascending channels are great until they resolve lower. So now I guess you'll see what happens here if it makes its way down to here. All right, Google was on the other end of it because they're the ones getting the Apple business for the cloud. And with that, look at this little topping tail. So now I would say for Google, that held support here, had a big move. Now it looks like it has a small topping tail. If you were trailing it long, maybe get out of the way for a little rest. It's also extended from the 8-day. Followed the 8-day, extended from it. You don't want to initiate trades. Extended from the 8-day. So we'll see if this pulls in. I actually made some decent money short Facebook today. Not because I don't like Facebook, but because this is where it bottomed. Had a nice move. This was the pivot that it went through to squeeze some shorts. So I figured a good place to get out. And then today it actually gave you a small red dog reversal when it pushed through the prior high here of 112.50, hit 112.69, and came in. So now we'll see if it holds the 8-day, probably a spot to try and buy some back. This last time it had an ascending channel, broke for 3 days to the downside. Well, here's a new one. So we'll see if this has to break and where it could go. Apple, started off weak, wound up being okay. We listed this chart, a few times. One here, when it crossed this descending channel, then when it held support across 110, and then, recently it gapped up and now it's flagging again. So who knows? Maybe this Apple even has a little bit more room to get above this 106.30 to get towards the 200-day as they seem to like value. Okay, let's switch a little gears. We've been talking about Under Armour. Under Armour turned up today. This could be something that, you trade and you trail. It looks pretty decent. Nike was in the news today. What did it do? Took out prior pivot. It's been above all the moving averages now. That looks okay. Talked about, some steel names yesterday. They weren't blockbuster moves, but something like X, kind of held in there again after a big move. FTX, I think even, was even stronger. We said right around here it can get to the 200-day. Well, now it's at the 200-day. In my 2016 note, I said it's something that could double. That was right around here. So if you bought it here and took the pain, you know what? You almost got yourself a double. If you waited to have an igniting bar and break a downtrend a little bit closer to here, you didn't take the pain here, and you had a real clean move. And what a quinky dink above the 8-day moving average. So, I'm not here to rub salt in wounds or do, make fun of people for losing short. I just don't want you to have opinions. I don't want you to listen to everyone across Twitter, anyone on TV. I want you to listen to the charts. One of my mistakes is I have to write this big note in the morning and I read JP Morgan Institutional. I read all these smart money, research scenarios to try and put some more fluff into the note to make it, global and macro. But meanwhile, every single one on those global macros have been saying short the market or fade the market since 1950 when the charts haven't really told you that yet. So when things change, we'll change. But for now, pick and choose your spots. Keep rotating. Try and be tactical and flexible with an open mind. Don't start a pain trade if you don't have to. And what does a pain trade mean? First, you start long and you sell early and you're in pain because you remember when you had it a few weeks ago. The other side of the pain trade is revenging it, shorting it because you sold it early, and that's how you lose money versus not making what you thought you had to make. And you don't need to be in the pain trade. Life's too short. revisit things if you're not seeing it, or sit on your hands if you're over trading and you're a little bit lost. I'm going out flat tonight. Tomorrow's option expiration, and we'll figure out what's next. And there's enough action where if you're not seeing it 100% and you don't want to take the risk, then don't take the risk. Cash is a position, and there'll be setups every day, and you might as well be in a position where you can take advantage of them versus be in pain to miss out on them. Have a good night. I'll see you tomorrow.